Hello, and you're welcome to Global Business Insights, where from a global perspective we discuss ideas, answers, and questions in the fascinating places where culture, business, finance all converge. We continue to get more clues on the US economy as both Bank of America and Citi report their third quarter results. That's tomorrow. Also reporting, Goldman Sachs Group, Johnson & Johnson, United Airlines will release their earnings. Also, tomorrow, Morgan Stanley will publish their quarterly earnings on Wednesday. Thursday's earnings will feature Netflix and Taiwan Semiconductor Manufacturing, and American Express and Procter & Gamble will report on Friday. We also get the latest US economic data and an interest rate decision by the European Central Bank. That's on Thursday. The ECB is expected to deliver its third quarter point interest rate cut since June, taking its benchmark rate target to 3.25%. Nigeria September inflation data will be released tomorrow. The CPI still subject to upward pressures such as flooding, high minimum wage, high energy prices, and lingering currency effects, albeit that food supply improved and import duties are lower, reducing food prices. And in the UK, Prime Minister Keir Starmer will vow to scrap regulations holding back growth as he woos international investors after a rocky first 100 days in power as the International Investment Summit in London kicks off today. Boeing will cut 10% of its workforce, or about 17,000 people, as the losses mount and a machinist strike idled its aircraft factories. The strike is entering its fifth week. It's also pushing back the long-delayed launch of its new wide-body airplane. SpaceX made big strides on its ventures, completing a journey to space with its Starship that included catching the vehicle's booster back at the launch pad using giant mechanical arms. The successful test underscores the astonishing progress SpaceX is making with its launch capabilities as its Starlink satellite internet business continues its global growth. Some inflation data from China. Consumer price index rose at an annual pace of 0.4% in September after reporting a 0.6% growth in August. The consensus was for a 0.6% increase in that period. Month on month, however, Chinese CPI inflation was flat in September versus August, 0.4% acceleration, worse than the expected 0.4% month-on-month estimate. Chinese PPI, that's wholesale price inflation, also fell 2.8% year-on-year in September, following a 1.8% drop in August. The data came in worse than the market forecast of minus 2.5%. Singapore Central Bank today left its monetary parameters unchanged, as was expected. The data showed the economy improved in Q3, though analysts are betting on a loosening in policy early next year to guard against external risks. After what many saw as a lackluster 100 days, UK Prime Minister Starmer's most intractable problem seems to be the sluggish economy, hobbled by rising public debt and tepid growth of just 0.2% in August. Starmer has warned that things will be tough in the short term before they get better. He says public spending will be constrained by a £22 billion black hole in the public finances that will need to be filled. It's a tricky balancing act as taxes look set to go up to finance a more expansive spend, and the call to invest cannot compete with incentives offered by economies with much healthier fiscal position. It is unclear how much of regulations can be made lighter to ease business. Still, in the past, summits like this, which includes dinner with King Charles, have proven effective in getting the attention of major investors, and we do also get statements of intention to invest. October 30, Rachel Reeves, that's the Chancellor of the Exchequer, will be offering a credible story on growth. Hopefully, without that, little will work. Reeves has to boost confidence, which is at a somewhat low ebb. Confidence depends on whether the government can communicate a credible growth agenda plan or trajectory that shows it can escape a low growth trap as it aims to convince investors that UK is reopening for business. Many are watching to see how expected higher taxes and the new Labour government agenda impacts the business attractiveness factors for investors, all at a time when fiscal space is super tight and capacity to finance any sweeteners very restricted. In Nigeria, the cost of living crisis is not abating as the price of petrol goes above 1,000 naira per litre, and the naira also fell further towards 1,700 naira to the dollar. The cumulative effect of flooding in food-producing areas compounding supply chain issues implies, as we get the data on inflation tomorrow, progress in drops in inflation will be held back by lingering inflationary pressures. Infrastructural damage from floods includes 6 collapsed bridges in the northeast, severely affecting supply chain in the region. According to an analyst in Financial Derivatives Nigeria Limited, inflation risks remain high and are more structural than transient factors such as currency depreciation, seasonal variations, supply chain disruptions. To defeat inflation, which is over 30%, much more structural root causes have to be addressed more vigorously. The challenge of advisors is preoccupation, perhaps rightly so, with stopping the bleeding and going after virulent symptoms which cannot be allowed to linger, but without bolder actions to confront root cause and structural factors, efforts tend to yield little. Structural issues include low productivity, worsened by a massive infrastructural deficit, high inflation expectations, high insecurity issues in farming communities, and very lax fiscal practices. Core inflation also needs more drastic measures as it continues to inch up, despite continued tightening by the Central Bank Monetary Policy Committee. Financial derivatives analysts see inflation up in October after the petrol price increases and as the high minimum wage leads to more demand. EVI expects stickiness in prices to result in at best a flat CPI print when we get the release tomorrow. It's hard to ignore Musk and progress made towards commoditizing space travel. The major factors relate to cost and ability to reuse extremely expensive equipment like spacecraft boosters. The triumph for the engineers of SpaceX is coming from the reusability of a booster to launch a huge reusable spacecraft. That's the Starship. This implies cargo can grow and costs will be much lower, putting SpaceX far ahead of the competition. Indeed, no other rocket company currently has reusable craft boosters, but competitors like Blue Origin, owned by Jeff Bezos, and Rocket Lab, a smaller startup, are testing. SpaceX launched its Super Heavy Starship rocket on an unpiloted test flight on Sunday and then used giant mechanical arms on the pad gantry to pluck the descending first stage out of the sky in an unprecedented feat of engineering. Elon Musk called it a big step towards making life multiplanetary as he bets big that someday in the near future commercial commutes to space will be a reality. Apart from reusing rockets and crashing launch costs. SpaceX hopes to retain leadership in this space by mainstreaming space flights, make space tourism possible, privatizing and commercializing space-related ventures and travel, and of course using its spectacular launch webcasts to popularize space flight. This is a space to watch, no doubt. Asian stocks swung between gain and loss as investors struggled to interpret the latest Chinese broad economic stimulus promises made over the weekend, which still remained light on specifics. Minister of Finance Lan Fuan, at a closely watched news conference on Saturday, pledged to significantly increase debt, but left investors guessing on the overall size of the stimulus. Indeed, it was a volatile session for Chinese stocks. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.